Welcome to the Mint Report, our wrap-up of the day's business news. Here are the top stories. The rupee plunges to an all-time low. Markets fall for an eighth day in a row. And the government looks to integration to combat power shortages. We begin with the rupee, which seems to be getting weaker against the dollar every day. On Monday, it dropped to its lowest ever. It ended the day straight at 52.15 for every dollar. Monday's fall occurred despite some dollar sales from the Reserve Bank. FII inflows into India have been drying up for a variety of reasons. Investors are taking refuge in the dollar because of global uncertainty, and India's foreign stock markets have added to the problem. Of course, Indian stocks ended Monday in the red as well, marking the 8th straight session of decline. The Sensex plunged 425 points to 15,946 and the Nifty fell 127 to 4,778. Banking stocks were among the big losers of the day. SBI dropped 3% on the BSE to 1,673 and ICICI Bank plummeted nearly 5% by the end of the trade. Among IT stocks, Infosys declined 2.86% to 2,661 and TCS lost more than 2% to finish at 1,065. And the government is planning a move that could finally address many power shortages. The Power Ministry says it's looking to connect all 5 regional electricity grids in the country. The single national grid will allow power to be transmitted across the country from surplus area to shortage areas. The Power Ministry expects the integrated grid to be up and running by 2013-14. All in all, the government is putting in 1.4 trillion rupees so far to build a national power transmission grid. This money will go into increasing transmission capacity to 32,000 megawatts by 2012 from the 23,800 megawatts. And finally, Maruti Suzuki is pessimistic about its sales this year. On Monday, the auto giant said it did not expect to see a growth in sales volume this fiscal. It added that the entire auto industry was likely to grow just 2 to 3% this year. Car makers have been hit by poor economic conditions through much of 2011. And that's all we have for you. Thanks for watching.